Welcome back to the After Hours Trading Show. I know we have a couple videos in a couple days here, but we had a fan submission. We had someone who was asking questions, looking to take their first step into a much larger world and get started and learn how to invest from the very first day.
And for someone new, we suggest opening a Robinhood account. It's got a very easy interface, very popular, so it's geared to a new investor. It's easy to use. With this, you're gonna need to link your bank account. It makes getting your money in and out really easy. They're gonna ask you basic questions, name, address, social security number. You're gonna need your routing number available. Just basic.
Yeah, and once you do that, it's easy to take money to and from your account and to the Robinhood and back, no problem. With all that said, there's also going to be a few terms that you're going to want to know. The first one is market. When we say this, we're typically talking about the American markets, which are the S&P 500, the Dow, the NASDAQ. Those are the popular ones. They're the strictest and hardest to be a part of. So they're typically the best companies that you want to invest in and where you want to focus if you're just learning. We also have stock, which is equity or ownership of a company. Every share you own is a tiny fraction of that company that you own. Bonds, which are lending money for an interest in return. They come in all different time frames. The longer you loan it out, the more of a return you get. You have an ETF, which is an electronically traded fund. This one is a lot like a stock where it trades in shares, but it is tracking an area instead of one specific company. For example, we have Jets is one that's listed in the American markets, and it tracks like Delta, United Airlines, American Airlines, and Spirit. It's a combination of different airline companies, all trading under the average of how they do each day. The last thing to know is market value and your limit. And this is going to be asked when you go to purchase something, and it's pretty simple. Your market value is just buying it flat out at the price it's trading right now, compared to a limit. You can set whatever price you want. We highly recommend the market value. You're in this for the long haul. There's no need to chase pennies for these.
And it's important to know that you want to focus on percentages, not just the dollar value. A lot of times people get caught up in like big companies like Apple and Google and stuff where they're moving $25, $30 in a day, but compared to the price of the stock, this may only be like a percentage of a gain. Now, if you had something like a $10 stock and it moves $1, you're actually making 10% on that. So you want to focus more on percentages. A lot of times people get too worried about the dollar amount, but actually there's better opportunities with some lower stocks.
And then we also want you to know that you got to add to this over time. It's a misconception that people think they can put one initial deposit and just leave it from there, make some trades, and they're going to be fine with this. Even if it's small amounts, $5 a week, $5 a month, that's going to add over time, and that's how you're going to build your account. It's important that you also have cash accessible in your life, so you don't want to take every penny you have right now and throw it into the markets. There's plenty of unforeseen things in your life that'll come up, and you never want to be in a position where you're going to have to liquidate everything in order to potentially pay for these unforeseen events.
Same can be said for your portfolio. It's okay to hold cash in there. You don't need to always put it all into every stock. There's things that come up later in the week, the month. There might be better opportunities to buy stocks at better prices. So it's okay to hold cash and just wait for a better opportunity.
Yeah, you don't always need to put everything out there, and a lot of the times if you're just adding like small amounts like that $5, you are looking to buy companies that aren't quality, and that money can be disappearing on you. So that said, we're going to take a look at a couple companies that are more quality. So we have certain things like Nike, Disney, we have IBM and Chase. We try to focus on like a little bit more affordable for new people. Obviously Apple, Amazon, Google, they're great companies, but if you're brand new, you probably don't have thousands of dollars to throw at a single share.
And there's more quality companies even lower value than those that are good to invest in, like Bank of America, AT&T, Coca-Cola. These are good companies. They're not going anywhere. The price of their stocks is fairly cheap for the new investor. So they're good companies to get into. This has been the After Hours Trading Show. As always, please like, subscribe, comment. We love the comments. We'll answer them, and we'll make a specific video to anything you want to know, because we'd love to share our journey with you.
All right, thanks for tuning in.